Welcome to Trading Lounge and the US indices for the 25th of May. I thought I'd start with the Russell today. So we're looking at taking half a position on this high here and looking to add a full position once we've got a classic trading levels pattern sitting on the top of group 1, which is 2,300. So it's not looking that good. It's sort of chugging along a little bit here. So we'll just keep an eye on that. Now, for the SP 500, this is my optimistic count. The other count would just have this as wave 3 here, 4 here, and 5 here, and finish here with a 5th wave here. I won't get into all of that, but this is just to show you that we've got a bit more upside to go and then a correction here. But we're in this correction here, and because we're in a correction and it's a smaller wave 4 correction of 1 and 2 and 3 and 4 here, then we need to be extra careful. We need to look at both sides of the market, so that's what we're going to be doing. So there is a case for being bullish and there is a case for being bearish as well. This would be one of the bullish cases. I've got two bullish cases. Wave 3 and A and a B and a C here for this, and then wave 1 and 2, and then building to the upside here. Now the long trade here, as I've mentioned last time, yesterday and so on, is that we want the 4,200 to be the support. So we're looking for a classic trading levels pattern, and there's a good reason for that when we look at the bearish count. This is the other bullish count that I have here, with wave 3 over here with an A, B, C, D and E wave here, and looking for wave 1 to go up here. Now with this bullish count here, we'll also be looking at this on the tick chart. There is a case for having wave 1 sitting here and wave 2 sitting here for this, and then having this as wave 1 here and wave 2 coming back here and then moving off. It won't make much of a difference because we'll still be getting the first high above the level, and that's what we're looking for here in this case. So we'd be looking for a little bit more high here, and we'll go into a bit of detail with this, and then we would see the corrective move. Now it could pull back to the 61.8% of this length here and then move up, but if wave 1 is actually sitting on the top here, then we would see a deeper correction at that point, and we would come down a little bit further here, down a bit further, that's all. But at the same time, we would still be looking for that second high there to go long on, because even the bearish count that I have will have this top, this move down, a retest of supply, and then continue to move down, keep retesting but move down from that point. So I think I'll just go to the tick chart here just to finish off what I mentioned there, and then we'll come back and have a look at the bearish picture. So this here, we could count this up here as as wave 1 to this point and wave 2 to this point here, and then looking at this here, not that it matters a lot actually, but wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5 the third wave, 4th wave here, and looking for the 5th wave up here. So the 5th wave could be roughly the same length as wave 1, give or take, just take that with a pinch of salt. So looking at this wave 5 of 1 here. So this is where it becomes important here, because once we finish this structure, then we'll see an A and a B and a C wave. If we're counting this as wave 2 in here, and there's a good case for that on the cash market, as 1 and 2 here, then this would be 1 and 2 of the next move up, which could pull back to the 50-60% retracement level. But we know when we're working with a minor level, then we drop down to the next degree. So there'll be sub-levels here as group 1 and group 2 here for that. So we expect this correction to stay within this range if it's going to be bullish to the upside. So I think this counter's got some legs, and we would be going long above that second high there, which would be, of course, the B wave coming into play there. But if you can't figure that out, then just use the top, okay? And then we'll come down for wave C over here for this, and then move up from that point. So you don't really want to go long before the level here, before the 200, because it's tempting, but you could get trapped. You may be able to find another classic trading levels pattern sitting on here as such, and use that, and that's fine. But otherwise, that there is the safe trade, because that taking out the B wave here tells us that this is in 3 waves here. That confirms that it's in 3 waves, and then you can move up from that point. So that's why it's important. So just, you can do whatever you need to do, long as you kind of know long as you know what you're doing, in a sense. So that's the trick to the upside, and it doesn't matter if wave 1 is here, or this wave 1 is over here, and we have a deeper pullback. It's the same thing. So on the bearish side of the market, I think we've got that on the hourly chart, haven't we? So in this case here, we've got wave 3 up here, and we can look at this down here in 3 waves. So we know that the whole market, we know that whatever happens here, that's a bullish corrective pattern, will be going higher. But this just opens up the idea of having a flat correction. So an A wave here, an A, B, and C here for the B wave, and down for the C wave in 5 waves, which will stay pretty much in the same zone as this wave A here to be a flat correction, but it will be in 5 waves. So you can see now, if we count this as 1, 2, 3, 4, 5 up here, then you can see the importance of getting this entry right on that B wave high here, because otherwise you could get trapped and we'll end up moving lower in that regard. So that's why you just need to be a little bit mindful at this level. So what we're looking for, in a nutshell, at 4,200, we're looking for a classic trading levels pattern. So that's the arrival, the reaction, the first high above the level, and then the A, the B, and the C wave here. So that B wave we can go long on. You may be able to get a better position over here, but be very careful, because when this goes up and retests here, it can just, this is where it would fail and move down from at that point. So you got to get this little pattern in here, this entry and stop here, this straight line here. What you'll find in here, all wrapped up in here, is this bigger picture here, all wrapped up in this smaller space here. So you can refine what you're doing. It's just a skill set, and it just takes a bit of practice. So that's the sort of bearish case there, and there is a sort of supporting factor for this when we look at the NASDAQ, because, well, first of all, this is the bullish count, which we can come back to, but with this particular count here, with the NASDAQ from the top here, we can count this down as 1, 2, 3, 4, 5 here. So then having an ABC here would just be natural. We could look at this as 1 and 2 and 3 and 4 and 5. That would all be sort of sensible, wouldn't it there? If we look at this last leg here, we can also see that wave 1 and 2 would be in here, because that would be the 3rd wave here. So this would be the 4th and the 5th wave moving up through here for this. You may have gone long on this here, as we talked about having support on the 500. That's okay, but this is where it can fail. I'm not saying that it will, but it certainly could at this point. So what we need to do here is much the same. The 13,800 will probably be roughly the 78.6% retracement level. But that 800 is important, but also too, there's group 2 in there as well. So let's just go to the hourly chart, and we'll just pull that apart a little bit further. So I'll just clean this up first. So we're looking at that moving up there. Bit wonky, but 1 and 2 and 3 and 4 and 5. So in this 5th wave here, as I mentioned, you could see wave 1s and 2s in there, and this will just be the 4th here. So there'll be something like this happening here. So you want that top here. You'll only know the top's in place because it's rolled over. So you need to be patient with this. You need to have a bit of maturity. So this here and this top here, or second top, whatever. I'll just put it on the, I'll go to the second top. That's got to play out, this 1, 2, 3, 4, 5, and then after that, if the market does push up from that point, then you're okay. We know it's going to go much further than that, but we have to move past this A, B, and C correction. And the bullish side of it, as you saw when I first looked at it, would be, this would be one of the ideas here. You could probably even get a triangle out of this as an A, B, C, D, and E here as well for this, but this is a little bit small, a bit of a long shot. So I'll just stay with this at the moment as an A wave, a B wave, and the C wave here for a wave 4, and we push up. So once again, we just got to get past this leg here, this C wave through here for this. So a little bit of an unknown approaching, and it also will be a little bit tricky as well because today is Tuesday, so Tuesday will come in. So Wednesday and Thursdays are normally the swing days, so they're the days that will take out your stops. So they will be the days that this trend up here either turns bearish or gives us a this move up here, and maybe a larger ABC pattern coming into here. So all of this here being wave 1, a deeper correction, then moving up through there. And that would be Wednesday and Thursday doing that, or Thursday strengthening up. As you know, we've been looking at the bullish weekly cycle that has fared pretty well lately, and that means we can look for the correction on the Thursday and the Wednesday, but Thursday it's sort of shoring up in the afternoon and then seeing Friday bullish. So we need to get past that. We need to get past the bearish count, that's all. So that's the situation, folks. So let's just move on to some stocks now. Just before we have a look at our regular stocks, I just thought we'd have a look at Goldman's and maybe the Bank of America, because you can quite clearly see in these cases that this is really the other side to the market in a way. So wave 1 and 2 here, and then moving up for the third wave is not quite finished yet. So in this little structure here, we're looking for 5 waves. So we've got that little 1 and 2 and 3 and 4 and 5. So we need that to finish off. It may be pulled up to 400 in this case. But then we start this wave 4 pattern here for this. And BAC is the same as well here, which we talked about yesterday. So it's just really to give you an idea that we've got 1 and 2, and we're going up into 5 here, and 3, and then we'll be having wave 4, and then wave 5, so to speak. So this is really just to point out that this 1 and 2 and the third wave's not finished, the fourth wave is not there yet, and wave 5. So there's still a fair bit to this bull market. That's all I really wanted to say in that case for those in that on that finance side sector there. When it comes to the tech stocks, slightly different. So we're still looking for a large wave 4 for these as well. So in this instance here with this with Amazon here, we're looking for a move that will come back to the wave 4 of 1 lesser degree down here. So somewhere down near the 2.8 area through here. And we're looking at this move here, and then a rally back up into this space, and then a move down. So we're still looking for further upside here, which will be in 3 legs. We've got the first leg and the second leg, and we're looking at the third leg there. So just go straight to the tick chart to cut a long story short. We've been working, so the market's moved down. Now, I can view this as an A and a B wave here, as you know, and a C wave here for the B wave. So that could be it there, but I was expecting it to move higher. So I've just been a little bit cautious. So in this instance down here, I've looked at this as the A wave, the B wave, and the C wave here for this B wave, and then looking for a C wave to the upside here. Now, I don't know if that's the case, but because this here is in 3 waves, that's corrective at this stage, and the market can come down from that point. So having a trigger below the 3,200 at this point would satisfy any other move that was going to move lower from that point. Otherwise, we need to hold our horses and look at this here as a little impulse wave, as wave 1, back for wave 2, 3, 4, and 5 to the upside. So I'm not sure which way this market will move. So we just really got to just allow it to play out, but just be ready for it on that side. Okay, so this is Google here. Sorry, I lost all my alphabet. I've lost all my things off this. I accidentally deleted them. So it's possible to have wave 3 here, but if you remember from my old charts, I still had this top here didn't quite fit right. So there's also a reasonable chance that we can push up into here first before hitting that wave 4. So I'm just also going to go to the tick chart, and even though I've lost most of the counting, you may remember that I've had wave 3 here, and this pulled back to the 38.2% retracement level, and I've done this as an A and a B and a C here because we never really got 5 waves finishing off up through here, so it's possible to look at it as an expanded flat. Doesn't count very nicely as 5 waves down here, but I worked with the 38.2% retracement level and then waited for the first impulse wave to the upside, and that fell in place, and then we started to move up from this point. Now, as you know, with the other markets, with the SP500 and the NASDAQ, we're just looking for one more little top here. So this is where we also need to be careful here as well. So because it can be an A wave, a B wave, 1, 2, 3, 4, 5 for the C wave, and fail at that point, or in this case continue to the upside. So we'll see how this plays out. It's been a bit of a long haul, this one, but breaking out of the trend channel here puts this as a wave 3. That's normally a sign, breaking out of the Elliott trend channel, that we're in the 3rd wave. So yeah, a little bit odd my count here, I have to say, but it's held well, and we'll just see how it goes. The next weak spot is when this 1, 2, 3, 4, and 5 tops out here against this supply, maybe covering that gap over there or whatever, on the 2, 4 perhaps. So we just got to get past that there as well on this one. So nothing really exciting there. Also Apple as well, we're looking at, well, as you know, just squashing this back up a little bit, we're looking for a move further down here based on the 5 waves, the impulse wave we have from the high here, and then the ABC pattern that we've been working. So I was expecting a little bit more of a move back up to the 130 area before it collapsing, but just in case, we'll go short under this current low here as well. We may be able to bring that closer, but we were looking for an A and a B and a C wave to move up here and then roll over from that point. So we'll just stay with that story for the time being. We'll look at the tick chart though. So yeah, a bit of a rally. I know that the move up is corrective because this first move that we have here, we noted that it was just in an A and a B and a C wave here. So this is corrective, so no matter what happens over here, it will all be part of that arm. Now, an A and a B wave in 3. Now, I've had a little bit of difficulty with this here. It is possible to count 5 waves up here. So from that low there, we've got 1 and 2 and 3 and 4 and 5 here for 1 and back for 2 here. So I could get a 3rd wave out of here and a 4th and a 5th and have a top in here, as I had yesterday, and then looking at this as an impulse wave to the downside here. This could probably count as an impulse wave up here with an extension in the 1st wave, 2nd, 3rd, 4th, 4th and 5th here, and coming back 61.8% and then moving up again from that point. So we could put that in there. So in this instance, we don't want it we don't want the 120, what's this, the 126.50. So we don't want that, which is halfway between the 125 and the 28. That's how that's there. But we don't want to see that as the retested resistance. So a couple of things here. I haven't reached the target up here, and it is possible to look at this as an A and a B and a C wave to this point, but we haven't reached our target. So I kind of thinking, well, do I call all of this wave 1 up here like we did yesterday and back for wave 2 here, and then looking this up as wave 3 here, which obviously this would just be wave 1 and 2 here, and then 3, 4, 5. So it would probably go up a little bit higher than anticipated in that regard as well. Let's just see if that plays out as this wave 2 here. I mean, because it hasn't made a new high above here, let's have a closer look at it. Yeah, I mean, it plays out quite nicely. I'll have to check inside here, of course. It plays out quite nicely as an impulse wave, and it can be counted in different ways. One of the odd ways would be 1 and 2 into here, and then the third wave to here, and the fourth and the fifth to here. So from here be 1 and 2 and 3 and 4 and 5 to the third wave. But otherwise 1 and 2 and gap in the third here, and up for the first here, second. That's 5 waves. Maybe in that. Yeah, I'm not quite sure. I'm not too bothered about this. We're really just looking for the short trades on this, so we're not there yet. Like I mentioned, we can short under here. We could also short under here now. We can bring that up into this level here. We could probably even draw a line through here, but I won't do that in case it clips us out at the wrong point. So I'll just keep working this and see how we go. And the important thing here is, I guess, if we make a new high above here, then we can look at this target up here, and then I can start counting this as 1 and 2 and so forth up here. I will drop this just down under the 125 as the resistance, just in case we get an A wave and a B wave and a C wave down here and then push up. Yeah, just need to allow this to play out here. So we're going to go long under here, we can drop it up under here, and so on. So we're not there yet, we're just waiting for that to play out. With square here, as you know, I was looking for wave 1 and 2 and 3 and 4 and 5 coming into play here. So it looks like we're getting our wave 4 here now, starting to build here as expected. So we'll just allow that to play out a little bit further. I will go in and check to see if this counts right at some point, because it looks like it, from here it can be counted as 1 and 2 and 3 and 4 and 5 to this point for a third wave, and then the fourth and then the fifth. So I'll just keep playing that out a little bit further. I can see that in across here that we've got overlapping wave structures, so I'm quite sure that this is corrective in here. But as that we'll look at that shortly as it develops a little bit more. Facebook, we're looking at a rally to come into play and then further downside, but we need to be mindful. We can't really go long here until we take out this top here, because this really is a classic trading levels pattern, but it's the variation of one where it doesn't drop back below the level. So it's had the arrival, the reaction, the first high above the level, come and sit here, and then we can take that high out and that high out. So, but I haven't done that. That second high would be that one, and the top is that one. So we're just playing this little move here. So let's just go in and take a closer look at that. There is a case of, from the top here, of calling this down for wave 1 here, 2 here, and 3, 4 and 5 coming down through here. They could also be counted slightly differently as well. This move up here is the A wave, the B wave. We decided to go long here, and I've moved the stop up to here now. We had it at break even here, but I've moved it up here. So we're counting 5 waves up as 1 and 2 and 3, ABC for 4 now, and then going up for wave 5 here. So you can pretty much look to take some money off the table here actually, because we've got our 5 waves up. It may continue to move up, so we might just use a trailing stop. So if I put this here to take some money off the table at that price, and I'll just leave the stop here, and let's just see how it plays out from this point. It's not a fantastic trade or anything, it was just sort of something to do in the rally, so to speak. We didn't do it with all of them, so yeah, let's just see how this ends here. If you're into this trade here, you'll need to count this. So this would probably be 1 and 2 in here, and the third wave here, and maybe an A and a B and a C for the fourth, and one more move to the upside here for the fifth. So we're sitting on the 130. Just configure that. I'll just put that in a bigger size there. So that's the top of 130, which is group 1. And then we have the sub-levels. So from 20 we have 1, 2 and 3, and then 5. So we're at the midpoint here, 5. And then of course we've got 8 after 5, so the Fibonacci sequence, 8 there. We've also got group 2 in here, so we can go to the 2650 in here, and also the 720 in this case. That would make up group 2 there. So the levels 1, 2 and 3 to make group 1, the midpoint, the 5 being the second strongest number, and then 8 being the third strongest number, and we just drop in group 2 with that there as well, so that becomes a bit handy. Once you put the levels on and you start using them, yeah, they become pretty valuable. I mean, it's just simple support and resistance. It's nothing. It's no special indicator or anything. It's just refining. That's the journey, really. Okay. Don't waffle, Pete, too much. Okay, so Tesla, as you know, the A, the B, and the C wave here. And from B to C, we're looking for 5 waves of 1, 2, 3, 4, 5. And from wave 2 to wave 3, we're also looking for 5 waves as well. And in those 5 waves that we're looking for, that would be 1 and 2 in here and 3 here, and going back for wave 4 here, and then going down for wave 5 to make this 3 here. So we're looking for an impulse wave inside of wave 3. So let's go in to the tick chart and check on it. So from wave 2 here, we're looking down, blue wave 2, we're looking down for blue wave 3. And we're looking at, well, 1, 2, 3, 4, 5 for 1 and 2, and then 1 and 2 and 3 and 4, and coming down for 5 here. So, yeah, it gets a little bit messy here for this. I wasn't sure to put the wave 3 over there on this one. Doesn't want to give it to us, but we will persist. So it's possible to look, this is the A wave, the B wave, and the C wave up here. We're looking for this to pull back up to the wave 4 of 1 unless degree, or the 38.2% retracement level. So it's kind of there, and you could probably look at this in different ways as well. But we need to look for 5 waves in the last leg. Let me just check on this. I'd have to include all that as wave 1 here, but this is really dropping off quite quickly here, isn't it? We're close to a top here. What we could do here, you know, is look for the 600 now. This is sort of testing this. I'm not sure if that high is in. I need to pull that apart and focus on that a bit. I mean, I would just assume that there would be another move to the upside here for this. But what I was thinking, apart from all of that, is the short side. So obviously we can short below this one here, but I'm thinking that we could short at the 600, using the 600 rather. So we'll look for something nice and neat and tidy like this. So if this is the 600, it would come down and bounce off it have its reaction, the arrival, the reaction, the first low below the level, and then the retest here. And then we've got, this is the one that we can go short on, and this one here we can go short on. Now, if they get triggered, then you put your stop above the level. Sometimes this move here will actually go above the level, so you'll need to look, that's the overshoot pattern, we don't need that, we need this one. So it can, when it goes back to test, it can test there. So you would go have a short on this one, and if that market moved up higher, then you don't worry about that. Then you have to repeat the process over this side, but you'll always have this one here. So it may go above the level, it may not. Most times it does go above the level, so you just need to be mindful of those. So that's what we could do down here. So the arrival, the reaction, the first low below the level, and then the retest. Now, the retest may just fail from that point, or it may pop up there a bit further. It could do all those sorts of things. But in a nutshell, we've got that low there. That's the one that we're looking for. Okay, and that's something else. So that's that. Yeah, alrighty. Let's just go back over the SP 500 for a moment. So just to recap the SP 500, the important point of all of this is that this leg that we've got here, as you know, we're looking at it in this last little fifth wave here, which can also be wave 1 as well, but we need that to top. So we're looking for a little correction here that's underway at the moment, and then one more little high here. So on a 20 tick chart here, no, sorry, this is 10 ticks. So this is the last leg here that we're counting. So this will be wave 1 and 2 here. This will be 1 and 2 and 3 and 4 and 5 here for the third wave, the fourth wave. So we're looking for, this is on 10 ticks, remember? So we're just looking for one more move like that. And it seems that the stocks are doing that as well, okay? So that's what we're looking for. We need that to play out and then to pull back. And then we've got that reference point high there. And of course, we can have a second high, which is normally the case as well. So that becomes the catalyst for the trigger at that particular point. Yeah. So this little leg here that we're talking about is really just this little leg here for that. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.